Hey y'all, so I just wanted to hop on here real quick and just say that after editing up my video, I realized that I can talk way too much. So I'm gonna do you a favor and get to the point within the first 2 minutes of this video, okay? Today we're gonna be talking about how to invest your first $10. Like what app to use, how to put your money into it, how to start investing in stocks. I'm gonna tell you that quick, but I do encourage you to stay till the end only because I don't want you to hop in, not know what to expect, and then want to pull out because you lack the understanding of what to expect. But I'm gonna show you right now how to actually get in it, okay? Stay with me.
So the easiest app to use when starting out in the beginning is Cash App, okay? In the left-hand bottom corner, you'd see like a house icon, like a little building, and you click on that. Right now it says 200 because I already put 200 in there. And then you would go to add money. And then as soon as you add money and then press confirm or done, it's going to add it. So that's how you upload money. You'll see your balance there. And then you can go to stocks. I don't know if all of them will say explore until you jump into it. But right now, wherever you see stocks or Bitcoin, stuff like that. But today we're doing stocks. So I am going to hop right on in here. I don't know if any stocks would be presenting to you right now if you don't already own any. So I do have to take you to how to find stocks. So I'm in stocks already. I'm gonna go to the search bar, okay? And then just pull up a company that you like. Let's do Apple. So you would just type in Apple, okay? And then, so right now it says buy and sell, but let me actually go to one I don't own so you would see what it looks like. And you see how it says buy or follow? So you would press follow, right? And then it would end up on your list like so. So you see I'm following now, and now this company just got added to my list. So right now you will only see a list of things that you are following, and then you press buy. Then you can just go ahead and buy however much of the stock you want. So you press the little three buttons here and you type in however much you want to invest. It does not matter how much the stock is actually trading for. So this one is 157. All I'm doing is pressing and holding it. But even if you didn't have the total amount to buy a full share, you just put in however much you do have. So right now I don't want to buy that, nor do I even want to follow it. So I unfollowed it. I just was showing you as an example. Apple is a stock that I do currently have, and I'm going to show you how to buy. Mine says buy or sell just because I'm already in it, but I'm going to go ahead and buy some more. I'll just go to the three prongs, $10, next, and confirm. And as you see, and so I'm done. As you see, I went from my investment before showing 290 to now 300 because I just put in additional 10, okay? So that is how easy it is to put your money in the stock market, okay? And
so as you can see, with just a few clicks of buttons, it's actually very easy to put your money into the stock market. The real challenge is actually your mindset while going in. So stay tuned for the rest of the video so I could share with you what to expect when you first start investing. Good morning, good morning. I have no business being as happy as I am when there is nothing special going on. I am on my way to work. Today I wanted to talk to y'all about buying your first stock. What app to use, what company to get in, how easy it is. But before I do, I just wanted to hop on here because a little bit of mindset in the morning, okay? When I say life before the rat race, oh my gosh, y'all, we are in a consumer economy. So of course, big business want to push their product to get you to purchase. But what it's doing is causing you to live paycheck to paycheck before you even begin the rat race. What do I mean? Things like if you're taking Ubers and Lyft everywhere, before, when I was your age, Uber and Lyft didn't exist and I was skating everywhere. The bike, buses, trains, used to have the little monthly pass. We used to get around. So companies like Uber and Lyft, where you could get somewhere quick, even though it's cheaper than a taxi, is taking your money, and then DoorDash. You want the convenience you do that a few times a week, then you're waiting until the next paycheck to do it again. Companies like that makes your lifestyle so convenient, but it comes with a cost. So now all of these products and services that make your life so convenient is now causing you to spend, more. And it's not to say you don't have it. You're doing it. You got it. You just got to wait till the next check to get it again. But when I was your age, like, I was fortunate enough, to go to Mexico, Canada, the Caribbean islands, always out the country, Jamaica, on several cruises. But that is one of the things you should be doing if you desire to travel, because once life catch up to you and you are solely responsible for you, 100%, you are independent, and you possibly get dependents, and you start a family, and you get a house, and you got rent or mortgage, and you got bills and stuff like that. That's when it becomes a little bit harder to do exactly what you want. You in the sweet spot where you can do whatever the hell you want, whatever you want. So why waste your time watching Netflix, ordering DoorDash, when you could do whatever it is you want? Did you see the views? Do you see my drive to work? Because, man, at a time where I could do whatever the hell I want, I'm 22 years old, living in Buffalo, New York, and decided, you know what? Where do I want to travel now? And where do I want to live? I want to live in a place that people want to travel to. So I started traveling. Georgia, Florida, California. I started traveling to places I know people really like to visit. And when I traveled to California, I loved it. And I moved here. Because why? Because I'm young. Because I have nothing holding me back, nothing tying me down. And I realized, I didn't even know about the rat race. Nobody told me about this stuff. I just knew what I wanted to do, and I didn't have all these companies clouding my judgment of, like, I really want this, or I really want that, or I did spend money on stupid stuff. Like I said, bought a foliator brush, that just scrub your skin, get your skin clean, $200, and all the creams and stuff. That's stupid. All you need is some water and a rag. It ain't gonna cost you $200. I realized I spent money on stupid stuff, but it was okay because I had disposable money. It's okay because I knew my next paycheck was coming and I would spend it on something else stupid. Like, I knew that I was in a sweet spot of I could do whatever I want. My mom's not controlling my money. Nobody is controlling my money. I go to work and, my money is mine. So if I spend it on something stupid, oh well. All right, let me get the next stupid one before you even enter a time where you care about how much money they're taking out, before you even get your check, before you care about taxes and stuff like that. You're in a sweet spot. So that's why I am so keen on talking to y'all about things that you could do, things that I should have did different, things that you could do that, nobody told me. I didn't do different because I didn't know different. Nobody told me, so I want to be here to tell you, okay? While you are spending your money on stupid stuff, you can do something for yourself later in the future too. Like I keep preaching, I could be sitting on hundreds of thousands of dollars right now had I known better, but I didn't know better, so that's why we're here, and I'm gonna teach you better. I feel like I really need to beat that into you, where now is the time, right now, where you have money to waste and not stressing over where it's going. This is the best time to do it, before you get to a point where you get money that you need and you don't have any left over to spare, to waste. This is the time to do it. Okay. And so another thing, that's one point, and another thing I want to stress to you, your mindset. Because when you jump in, the market is volatile, which means it goes up and down and up and down and all around, and like a roller coaster, But when you're long-term investing, we don't think about that. We don't think about the days we're up, and we don't think about the days we're down, because we think about where it's going to be in the future. Okay? So as long as I can expect or think, if I even believe that this stock that I'm buying into 5, 10, 15, even 30 years from now is going to be more than it is today, that is the only thing that's on our mind. That is the only thing that we care about. Okay? And why do I need to tell you that? Is because as soon as you hop in the market and you see you have a down day, it might cause you to panic. It might cause you to feel like you're losing money, It might cause you to feel like, you might start questioning is this really a good investment? You know, so I want to prepare you mentally. I want to tell you the truth about what to expect, so you don't make the wrong decisions based off of fear. Okay, I got to tell you that before you even get in. You know, why also do I have to tell you that before you get in? Is because right now we're considered to be trending down, which means the market is going down. So, which means if you get in right now, it is actually a stronger possibility that your money will go down a little bit. So why would I tell you to get in right now? Why would I even encourage you to invest right now if I know it's more than a 50-50 chance that as soon as you jump in, it might go down? Why would I tell you to do that? Because I hope I deliver this well enough for you to understand. I really do. Because this is crucial. If I haven't said anything else, this is very important. Okay? And y'all smart. So I feel like you will get it. Why is it a good time to get in when the market is going down? When it's more likely for it to appear like you're losing money? Why is it better to get in now than when the market is going up and you can guarantee that that your money will go up? What's the difference, and why is it important to be getting in when it's going down? I'm about to answer that real quick for you. There is no guarantee that when you get in, the market is gonna go up. There is no guarantee. Absolutely not. There is no guarantee that when you get in, the market is going to continue going down. There's this thing called averaging in. It doesn't matter if the market is trending up today, you go in. It doesn't matter if the market is trending down today, you go in. Because you cannot predict it. And those who feel like they can, sometimes they're right and sometimes they're not. But when you're long-term investing, when you're investing is the stock going to be the same in the future that it is today, then it don't matter the daily moves. It don't matter what it's doing, you know, today is this, tomorrow is that, like that small details don't matter. And it is also more important to get in when it's red, when it's down, when it's trending down, because you can look at it as like a discount. Imagine this, follow me here for a second. Imagine this. Imagine yesterday, a stock was $200, right? Today is trending down and you see it at $185. It went down. Yesterday was 200, today is 185. Let's say you get in. When it goes back up to $200, you've earned $15 per share. You've earned you've gained what it went back up to. Versus, let's say you got in when it was the 200 mark. You got in, then it went down to 85. It would appear that you lost $15. You're not losing because we're not pulling it out. You're riding the wave. When it goes down, you go down. When it goes up, you go up. So when in the future, it's 10x what it was in the past, you up there with it. So it don't matter if it goes way down, don't matter if it goes way up. You're looking for the future. But I just want to show you that it's better to buy when it's down. And you don't know how far it's going to draw down. So same example, it was 200, went to 185. You see a discount, you get in. But that wasn't the bottom. That wasn't how far it was going to go down, but you don't know that. So let's say you got in, you got in at 185, and then it drew down again to 150. You know, that sounds like a lot. That sounds like a lot, right? But then it goes back up to 200, or let's say it went to 150, and then you put in a little bit more. You know, you got it at even more of a discount. When you got in at 180, it looked like you had lost money. It looked like you drew down, but now you're presented with another discount. And when you get in again, now you got in at 150, right? So you got a really good company stock. Let's just say, I'm gonna give you an example. Let's just say Amazon. We all know Amazon, and everybody got Amazon packages going to their house. It is a well-known company. If you didn't know, I'm gonna let you know right now. It is a $1 trillion company. It is a good company. So if you see that their stock is trading for lower than it usually do, that is a discount. It is 150. So then when it shoot back up to that 200 range, you rolled it back up, you got it at 150, you got an additional $50. Plus, when you got in at that 185, you gain another $15. Okay? So I don't want to do too much math. I know math is not everybody's strongest subject. And sorry that it is getting dark. I just arrived to work. But yeah, hopefully you got that basic understanding of why you should get in when it's down. And also, I'll give you prime examples, okay? I'll try to keep this quick, but if it's not, the message is way more important than for me to be trying to, you know, rush a video. I really need you to understand what I'm saying here, okay? I told you before, Bitcoin, right? It had reached, I remember when it reached a high of about like $64,000, right? Now that may seem so high, because it is. That's crazy. $64,000 for one coin. If you want to buy one coin, it costs you $64,000. That is a lot of money, right? But around, I believe, when COVID happened and we had the stock market crash, it dropped all the way down to about 40,000. That's a lot of money for the people who was in. For the people who panicked and they see Bitcoin dropping and dropping and dropping, and it's like, let me pull my money out because I don't want it to drop even more. I don't want to lose. There is no guarantee that it's going to go back up. There is no guarantee. I just want y'all to know that right now. So it's like, I'd rather play it safe. A lot of people got scared. A lot of people put their money out, which makes the stock market fall even more because people are getting out of it, right? And then now today, Bitcoin is trading around $100,000. So those who left their money in, rode the wave, and didn't do what the masses are doing, didn't do what everybody else is doing, they now got to see their profit, even if they got in at a high of 64,000 and then rode it, and let's say they didn't even have any more money to put in when it got low to the 40,000s. It doesn't matter. When you was at that 64, $100,000, you rode it up. You're winning. But you would have never seen that if you did what everybody else is doing. This is why it's important to buy it low or to not panic, so you can reap the benefits of the future. So now, after all that being said, Bitcoin is trading about, instead of 100,000, right? It dropped to it's around today, around 83,000. People are panicking. Some people are pulling out because they're like, oh no, it's dropping. It's not as strong as it was. It was just 100,000, but it's not strong anymore. So let me pull my money out. That's some mindsets. Some mindsets is, well, remember when it fell before and it rose past it? If I see a discount, let me buy the dip. If it goes down even more, okay, it goes down, but I got it at a discount. I got it at a cheaper price. So when it go back to 100,000, I wrote it up. And when it surpasses 100,000, I get more. And that's how you should look at every stock that you're in. I know I'm using big numbers because Bitcoin is a lot, which I'll get into that at another time, but you can still buy Bitcoin even if you don't have $100,000. I'm in Bitcoin right now, okay? So I'm gonna show you how to do that. Not right now, but I'm gonna show you. But it's the same concept for smaller stocks, just like I was saying, Amazon, you know, or like Google, Tesla, Apple, all of these companies. The stock market is going down, but these are really good companies. There's a lot of people that say, oh, like when Coca-Cola or McDonald's or Pepsi, when they first started back in 1992 or something, like in the 1990s, and it was selling for 12 cents. Imagine if I got it at 12 cents and then now today is a couple $100. Now, if I got it at 12 cents, wow, I'd be a millionaire. You know, people talk about what they could have did, should have did. However, when you're presented with an opportunity to get it low, then you take it, because 10 years from now, 10, 15, 20, 30 years from now, when those same stocks, those really good, well-known companies are trading for, instead of a couple hundred, couple thousand, all the people, when it is at that point, is going to say, oh, back in 2025, I could have got it. Wow, it was only $100. Oh, wow. People with that mindset keep talking about what they could have did and should have did. So I'm saying, as the stock market is falling, you don't got to say, I should have. You just do. It's falling. I got it at a discount, so that when it's trading thousands of dollars in the future, you're not with them people to say what they should have did. You did. And that's what I'm saying, because you could in the future have hundreds of thousands, like I'm saying I could have today had I known better, right? And let's say you don't have hundreds of thousands. Let's say stocks aren't trading at a couple thousand in the future. It's okay. Imagine sitting here today, you have the chance to say, I could possibly have. Because the one thing's for certain, if you don't do anything at all, you definitely won't. If you don't invest in the stock market today, or how I'm telling you, around this time, if you don't begin, if you don't start, if you don't have a journey, then you definitely won't have hundreds of thousands 5, 10, 15, 20, 30 years from now. You definitely won't. You don't do anything at all today, you definitely won't. But if you do something today, you might. It's a possibility you could. And even if it's not hundreds of thousands, it's something. So that's the mindset I want to put you on today. When you jump into the stock market, you might see your money draw down. I am down $1,000. And yet I still pray, hope, and wish that the stock market just keep falling so I can average in. It's okay. I'm not looking at that I've lost 1,000 because I'm not pulling my money out. I didn't lose anything. But I see a drawdown, and I just hope, give me a good year, that the market stays stagnant. They call it consolidating, that the market just moves sideways. Some days is up, some days is down, but it's not moving up. It's not trending up. It's just kind of volatile sideways until it shoots up. Give me a good year. It's okay. And I'll keep putting in every paycheck, every week. I'm going to keep putting in. Because I don't have $30,000 to just drop right now while stocks are low. I can't buy all of them at a discount right now. But every time I get paid, every week, I can buy a little, by little, by little, by little. And then over time, it might be that I invested $30,000. But as of right now, I don't have it. So I'm actually hoping that the stocks stay low. But it's the mindset you got to be in. And I know just watching one video is not going to either one, put you in that mindset, or two, not make you feel those emotions. It took time for me to get to where I am. It was important for me to share this information so you don't hop in and then pull out, which would be a mistake. I don't want you to hop in the market and see it going down and you feel like you're losing money and then you start acting out of fear like everybody else. You got to be able to make a small risk. A lot of people are not willing to take a risk, so they'll rather save their couple $1,000 right now and then miss the boat on hundreds of thousands because they were scared to take that risk. So if you see it going down, buy more. It's a discount.